Okay, welcome back everybody. This is episode 4 of Backtesting with a Purpose. It's the last day of 2022. Hope you had a great year. And if not, 2023 is your chance to make it a better one. I just want to start off with a little motivational stuff here. The toughest thing that most traders ignore or experience over and over is psychological issues in trading. And honestly, the truth of the matter is psychology is like 90% of what you're doing here. You're battling yourself. You're battling your own issues that you may or may not be aware of. If you are aware of them and you're trying to change them, you're way ahead of everybody else. And I'll tell you, if you're not consistently profitable, more often than not, or 9 times out of 10, it's something to do with your psychology, right? Because even the guys they have like your trend line setups and classical charting and Bollinger Band strategies and what have you, even if they have like a 50% win rate, they're still profitable if their psychology is on point, right? There's some other moving parts to that, like risk management, proper money management. Those are important. But the number one thing that it comes down to, if you're not profitable yet, is psychology. And I touched on this in the last stream. The biggest thing that you can do is learn how to walk away from a trade once you've lost it. Obviously, getting out early is nice too. But if you take a losing trade, learn how to walk away and fight or defeat that feeling of having to make it back immediately. Just doing that in and of itself, basically, will improve your trading significantly. So with that being said, let's start off the way that we usually do. We're going to mark out midnight open and equity open, and we'll get our levels on the charts here, and let's start back testing the last few days of the year. Christmas is coming up on the next, so we're back testing Friday's price action before Christmas, which was on Sunday. So Sunday will be closed in the markets, and Monday I believe it started a little bit later than usual, but Monday is the first tradable day after this day that we're doing right here. So things could get a little bit crazy, but let's see what happens. Fridays are always a little bit sketchy. Okay, so now we play out London and see what we get. Typically you'll want to see a nice gyration back and forth around midnight open. Look at that. Let's check the economic calendar. I don't see anything too crazy except for core PCE, and that's what just happened there at the 6:30. Or I guess this is the London kill zone, or excuse me, New York kill zone. Let's pop on up to the higher time frame, since it is a Friday, and see what the weekly did. So we've just filled in this fair value gap here. Excuse me, SIBI. 4-hour SIBI, and it's almost filled. It's not filled all the way. And this V-shaped price action here, this price swing, if you will, there's a mitigation block in there. Right there. So that's a proximity array to be aware of. Go down to the 15 minutes, see if we can refine that at all. Okay, so we've had quite a bit of movement here on the PCE news. 162 points. Coming right up to the EQ. And if you notice on the 15-minute, we've come right into this fair value gap here. So that's something to be aware of as well. Sometimes what you'll see, and what I actually like to look for often, is right at equity open, price will go up or down into a 1 hour fair value gap that was formed previously. And that's always a great confluence. So let's make that, oops, discount. Okay, so we've taken liquidity on both sides of London. Tapped into this fair value gap, tapped into this fair value gap. It's a Friday, and that makes it a lot more difficult for analysis. But let's see if we get anything interesting after equity open that would kind of give us an indication of what's about to happen. I tend to think that we dig a little bit deeper into here, just by what we're seeing. This is pretty clean. But we'll have to see. Okay, and remember in the previous streams what I was telling you is what you really want to look for is you want to be looking for the move that took liquidity, the swing low or the swing higher right before that expansion into the liquidity. That's where you're looking for your break in market structure or your market structure shift, whatever you want to call it. So go ahead and mark this out. I'm going to remove the mitigation block since it's been, the business has been done in there. And just so you guys don't get confused, we'll make this 1 hour fair value gap a different color. Let's call it orange or something like that. And we can label it as well. Typically, you'll have made your money for the week before Friday. And if you want to keep fresh or keep sharp, you could do some demo trading, stuff like that. I typically don't trade Fridays unless I'm doing a loss recovery, you know, my last shot at making up some losses for the week, something like that. A really good idea, and ICT also says this, once you've hit your profit target for the day or for the week, you got to walk away. Stop trading. Or at the very least, trade demo only. Make this orange as well. Okay. And right now what I'm doing is just annotating the breaks in market structure and the liquidity grabs that we have here. And I'll tell you what, let's pull this over here so we don't get confused. Actually, this might get tapped again if on equity open potentially, so we'll leave that there. Pull this over. So the tap into a 1 hour fair value gap is always a nice indication of potential direction. But again, we've cleared the board here on both sides. And it's a Friday, and it's the last tradable day before Christmas, so things could get a little crazy. And you know, if you try to trade this, you might take a loss. It just is what it is. Let's just do it like that. Come down and mark out this break in market structure. and would definitely recommend you guys watch the previous backtesting episodes if you haven't, so you know what we're doing, why we're doing it. Okay, so what I see here is a potential for this to get filled, if not all the way back up to here, and maybe sweep this before continuing to chop for the day. The other avenue is that it just goes completely down from here pre-equity and continues on the news momentum. Remember at 6:30 Central, 7:30 Eastern, there was PCE, and what they did is they chopped around, just held a tight range, and then about an hour later at the kill zone, New York, the craziness ensues. So we're going to mark this out and prepare for a potential entry into that. That's kind of what I have my eye on. Okay. And we'll get right up to equity open and take a before screenshot. Looks like it could be setting up for a nice re-entry up there. Let's find out. Okay. So make this a little bit bigger. Take our before screenshot. And then we'll play out equity open. Here we go. Okay, so we definitely did not get a chance to get back up into this. Likelihood that we would have seen this or known this was the one is not very high. So we would likely have missed the move unless it gives us another shot right in here, right there. This order block. It is kind of sketchy to go from here, but we are coming up into this breaker, 1 minute breaker, and this order block here, so there's confluence. I would go ahead and take a trade from here and be accepting of a loss if it happened, and potentially re-enter down here if I needed to. So let's mark this out. These consecutive down candles here. Send that to the back so it's not all covering everything. Take this off so we don't get confused, and put it where we would be entering. And again, last tradable day before Christmas, end of the week, Friday. So it's quite possible we take a loss here, so we'll find out. It's an order block. Bearish order block. There we go. Okay, put our position on. The EQ of this block is where we'd likely want to take this. Normally you just take a position here, but with the breaker EQ being up in this area and the block being up in this area, you could just hit the EQ of this fair value gap as your entry. So you know it's going to dig up a little bit. And we'll probably see some significant drawdown from here. We've already got a 42 pip stop loss on. Going up to the higher time frame. At least hit a 2 to 1. Okay, let's see if we get blasted out of this position, or if it was valid. Take our during screenshot. Bam. And now we play it out and see where we get, where we go to. Okay. So we've hit our target on a 2 to 1. Friday will likely chop around from here, or suck back up into the range and potentially go for buy side, or even back up into this that we were looking for originally. But there's a profitable trade on Friday. You didn't have to catch the initial move. What I do like about this is I like seeing the first, and I talked about this last time, I like seeing the first 3 minutes of equity open give us like a short little pop or retracement, first 2 or 3 minutes, and then significant movement downwards. That would have clued you in, along with these PD arrays that are overlapping with one another, that this fair value gap would potentially be a good entry. And if you notice, we came and hit our profit target before it did its retracement, which is always good. So let's go ahead and mark out, let's mark out the trade parameters and record this. I call this Friday, December 23rd. Was it a post-equity entry? Yes, it was. Was it an internal or external liquidity grab? Well, we had the external liquidity grab over London, so external. Was the displacement over 60 pips? Absolutely it was, or 60 points. So that's ideal. Was our stop loss able to be put in a safe area, which was less, 25 points or less? No, not in this case. So it was over, it was like 40 something points. And we didn't see any drawdown. I mean, maybe like a point of drawdown, but that's insignificant. So we'll just call it less than 5 points. Price action is average. I wouldn't call it necessarily choppy. Choppy is like take the high, retrace back into the range, take the low, retrace back into the range, almost reach the high, come back into the, you know, like seek and destroy type stuff. And it's very clear after like the first 2 or 3 swings, when that happens, you're like, okay, I'm in seek and destroy conditions. I need to just step away. But in this case, it was average price action, so not too bad at all. Trade duration was fantastic. I mean, within 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Within 13 minutes, we got to our profit target. So less than 15 minutes that we were in the trade. Was there, how many fair value gaps were there? There was 1, 2, 3, and even this fourth one up here, which could have been tagged again. So that's less than ideal, but let's just call that 3. And there was multiple proximity arrays. That just means, are there price action arrays like breakers, blocks, rejection blocks, volume imbalances in the area of our anticipated entry zone? And yes, there was. And those were on the 5 minute or less. So the grade of the setup, post equity, external, over 60, more than 25. Okay. External grab, yes. Can you guys see this? Do I need to slide this over? There we go. This is our scoring system. Go back and watch the previous episodes if you have questions about this. But it's basically just grading the quality of the setup, so that as the setup is forming and as we're getting an entry, we know how much to risk or how much big of a position size we should use. We couldn't get a 25 point or less stop loss with a safe area, so that's a no. And there's no fair value gaps, no singular fair value gap. So we got 3 out of 5. That gives us a B+, which means we can risk anywhere from 2 to 2.5%. Being a Friday, Christmas holiday coming up, I would absolutely be risking the minimum possible, so that's 2% risk. Assuming we're on an FTMO account, let's call it 100,000, because that's what I'm trading, and that's what most people go for. With the B+ setup, we're risking $2,000 on this. And the way that you calculate your position size has to do with how much you're risking and how far away your stop loss is. So if you whip out your calculator, and I think we had, let me pull up my calculator here. Just bear with me. Okay, so I think we had like a 42 point stop loss. Yeah, 42. So 2,000 divided, so the amount at risk divided by how far away your stop loss is. That means we can take a 47 lot or contract position size, and our take profit is 80 something, 84 points away. So 47 times 84 means we're risking 2,000 to make approximately $4,000. It's like 3,948, so it's close enough. So let's call this 84 points profit target. And the profit was 39.48. Might be a little different for you with slippage or the spread on your broker. But that's not a bad day at all for a Friday. For a B plus setup, that's great. And the last thing we're going to do, let me get this out of the way so you can see. Bring that down. Maybe a little bit further. There we go. And then I'm going to take this replay back to where it first hit our target. And we'll take a screenshot. So now you'll have a screenshot of before, during, and after a B plus setup. You've got it logged on your chart. And you just keep doing this, as I mentioned in the first few episodes, backtesting with a purpose. Well, what's the purpose? Well, the purpose is we want to be building a playbook of our best setups according to the strategy and the rules that we're following, taking pictures, recording trade data, and instead of just having like a giant file or using a backtesting software and just saying, oh, well, it wins X number of times and loses X number of times. Okay, I've got a 65% win rate. That's cool. There's nothing wrong with that, but what are you going to do with it from there, right? Are you actually going to print this out? Not likely. So with the playbook, you take your top 3 to 5, depending on how many days you've backtested, your top 3 to 5 screenshots or setups, if you will, and you're going to print those out, hang them on your wall, do whatever you need to, frame them even if you want to, and you need to be looking at those when you're trading in live environments. Every time you sit down before you take a trade, you want to put in your brain, this is what an A plus setup looks like, or this is what my A setups look like. You know, this is what happened before, this is what it looked like during. I can expect X number of, points of heat or drawdown on this position. And, knowing the pair that you're trading, having an intimate knowledge of, how many points of a stop run is typically happening. Like, for example, on a regular day with no crazy news events, NASDAQ, it typically stop hunts anywhere from 20 to 35 points on its retracements before it continues in its direction. That's not always going to be a hard and fast thing, but you just kind of get a feel for it. It's intuitive after a while. So focusing on one pair, one market is going to be very beneficial for your trading because you'll start to learn how this operates. So we're going to take our screenshot. Boom, there we go. And now we're done with this week. We're basically almost caught up to current price action. So if you guys want to stick with me for, it might take a little, like an hour or more. If you want to stick with me through here, we can continue doing some more days and basically almost get caught up for the year. So let's pull all of this off the chart since we're done with it, and we'll shift to the next tradable day, which is a Monday, the day after Christmas, and we'll get all of our stuff moved over. That's pretty much it, guys. I mean, this is exactly what you would be doing before your entry timing. For example, I always wait, or most of the time, I'll wait for equity open. And as a beginning trader, if you're just starting with ICT, you always want to wait for equity open. If you're using the 22 fair value gap model, you always want to wait because it can get a little crazy. And there absolutely will be days where it just moves pre-equity and it moves like 200-300 points, and you've basically completed the day's range. There's no reason for you to be trading that. You should not. It's basically the same thing as chasing price, right? Even if you see a setup at the end of the day or whatever, you shouldn't be doing that unless you really know what you're doing. So let's pull this over. And we're going to have to play out some price action for this to show up. You see it come back up to this fair value gap we were originally looking for. This one right here. And then it's going to take a while, but it'll probably just chop around the rest of the day. Maybe go for one more liquidity pool somewhere. But it's pretty uneventful for the rest of the day. Okay, and yeah, it just chops around the whole day. Okay, now we're into Monday. And I guess we got to skip Monday. Or the first open on Monday. Because it went right from Asian session. Pull this over to midnight open. And let's go back up to a 15-minute chart. Get rid of these guys over here. Okay, so what you've got here is a price leg that formed a bottom, and you've got a swing high that was broken, and then a retracement down into what's basically an OTE, optimal trade entry. Right. And I want to do something a little different. It might take a few extra minutes, just bear with me here. We had a very eventful Friday. All right, this is Friday's price action. I want to do some CBDR and flout and Asian range measurements for the next week. Yeah, that's what I'm going to do right now. So, fib retracement, and where we're going to be working. We're going to be working on Thursday's Asian range. CBDR and flout. Finding liquidity on unsuspecting traders, central bank dealing range, and of course your standard deviations for Asian range. You want to overlap those and see where they all line up. Let's pop up to the higher time frames. So right off the bat, we've got this 4-hour SIBI that we're in close proximity to. It's almost guaranteed to tap that. Let's make that blue. SIBI. Sell side imbalance, buy side inefficiency. And of course, that's overlapped with a bearish order block here on the 4-hour. Chart might get a little bit messy, so I'll put it on and then I'll just take it off again, but that's what you're getting into. And again, you're looking for confluence, right? So notice how the EQ, you see this little halfway point of the block? The EQ of the block lines up almost exactly with the EQ of this 4-hour SIBI. So that's a point of interest, or POI. So I would absolutely mark that out. Just take your best guess and throw it on the chart. EQ right there. And then you can use the measuring tool to get a little bit more accurate with it if you want. Looks like we got pretty close. So that's at 11,175. And now that's bang on right there. Okay, so we'll go back to the 15-minute. We're focused on the previous week's Thursday's Asian range. And that's 1800 server time to 2300 server time. 1800. So you're looking for the lowest low between 1800 and 2300, which is right there. And then you can use these arrows to back it up to the beginning of the window. Just helps you get a good visual. The highest high is going to be right here. And you can put that forward. Okay, so right now we've got an overlap. And if we were to put another deviation on here, which we can absolutely do. Let's call it a -3. That overlaps with our point of interest, right? So that's nice to see. And just so we don't get confused, we'll pop another deviation to the other side, so we know our directional bias. We're looking for shorts basically after it comes up into this area. Okay, so now we can do the CBDR, which is central bank's dealing range, and that's 1300 server time, so in the afternoon to right after Asian Open, so 1300 to 1900. So let's come back to 1300. Lowest low between 1300s right here. The highest high between 1900 is this guy right here. Whoops. Put that out to your time there. See how they overlap? Okay, and now we can do the flout, which is essentially the whole thing combined. So starting at 1400 server time to 2300. Lowest low after 1400, it's actually the 1400 candle, so bam, right there to 2300. The highest high, let's make that a little bigger. It's right here. Actually, technically, it's right there. And we'll just bring this bad boy over to 2300. If you notice down there at the bottom, the time that I'm looking at. Bam, right there. Okay, so now the job here is to look for overlap. Let me just... Okay, so we absolutely have overlap, and look how convenient that is. It's right there in our point of interest, right? You see central bank dealing range, flout, and the Asian range deviations are all overlapping the EQ of this 4-hour SIBI, which is we had already delineated as our point of interest. So what I like to do is I like to just do a little box. I'll take my magnet off here so I can do it manually. And so from the highest confluence to the lowest confluence, right there. And that's just a nice clear little visual. Let's go out to the next New York window here. I'll call that Asian. Right? Send this to the back. Send the EQ line to the back, so put that on top so there's no confusion, and let's make it purple. Great. So now we can take all this garbage off the chart, clean it up a bit, and we'll do our standard preparation for the New York session, Equity Open. So 2300, bam, right there. $830. Midnight open. Okay, guys. And let's see how far away this is. Right, midnight open will probably be somewhere around here. Back into this. I'm just guessing, right? There's no way to really tell until it happens, but somewhere around here. About 127 points away. That can absolutely happen during London and at Equity Open. Notice too, we've got a big figure up here, so it could overshoot our area a little bit, potentially. Big figure is the 11,200. But the 1180, which is like the next institutional level, 11,180 or whatever, that's almost exactly lined up with the EQ of the SIBI and this point of interest here. Okay, so without any further ado, let's play out London, see how close we get to this. Mark out our midnight open price. There we go. Well, let's see if we get this or if it happens later in the week. Now, also, what could happen, there's not really any major news. What could end up happening is we could see a long setup to our point of interest, right? So don't just wait for it to go up there and say, okay, well, if it didn't do that, I don't have a trade. The power of three that ICT teaches, which is the open, the high and the low, open and the close of the candle, right? The high and the low and the close. If you notice, the day starts off here, we've made our low, and we could potentially get, so let's say we even go down further here, we could get some sort of sweep below here, a break in market structure, fair value gap setup, and then it comes up to at least the bottom of this for the day, and then you could leave a runner on for potentially the high of the week on a Wednesday instead of a Tuesday. So don't get discouraged that it's going down already, but let's just see what we can find. So obvious liquidity has been taken over London. Let's play out Equity Open. We'll go down to the 5-minute. There's not really, I mean, London formed like a standard fair value gap model, if you see. I'll just mark it out for you guys real quick so you can see that if you're a London trader, you would have caught a nice trade here. A pop above midnight open. The swing low before the run that did the liquidity grab, that's what your eye goes to, right? That's what you're focusing on. Just bear with me while I mark this out. You'll see what's going on here. Break in market structure, right? Fair value gap at the 50% of the displacement leg, this displacement leg which broke structure. Make that the premium. Make that the discount. This candle which forms the premium line of the fair value gap, this right here. Stop loss above midnight open, above that candle, and above the BSL which was taken. So that's great, and it's only 25 points. Targeting at least the EQ of this, looks like a 5-minute busy. Well, that's technically a fair value gap. It's not crazy big, or more than, you know, 30 points or so. You could even target, you know, the close of it right there. These equal lows here. I tend to think those would have got grabbed into this order block. So I'd be targeting like the top-ish part of the order block. I mean, it's a 3-to-1 trade right there for London traders, right? You had a chance to pyramid your position, get another position short here, because once it's past this low, you probably don't want to be taking anymore. So you could have shorted here if you missed it, if you were still awake. Could short here, I don't recommend it though. But for us New York traders, let's see if we get a setup ourselves, right? So now when it runs away from you like this and you have a POI left open way far away, you're going to wait and see if you get like a bottom forming here, and then you want to see that bottom liquidity taken and then a break in market structure up. So let's see if we get that. I'm going to take a before screenshot. And now we'll play out equity open. So we're waiting, we're patient, we're waiting. It's taking liquidity here, so we can mark that out. That's a 15-minute liquidity there. And notice how it's reacting after it does that. And you see it's sort of leaving this low intact from the previous week. So we've just taken out Friday's low. That's significant, right? It's not just any old low. We took out Friday's old low. So let's mark that out real quick. So we're way below midnight open for the day. We've taken out last Friday's low. We've got a POI as a potential target now. Instead of getting a setup from this, it's a potential target. So what we're looking for is a break of, let's go down to the 1 minute here. This is great. I love seeing this. So you had Friday's low taken right here, and then you had the liquidity grab move taken again. It's absolutely a good sign. And you're looking for, okay, so the first grab that it took, you're looking for a swing high. I would tend to think this is the one that we would be looking for breaking market structure. So we'll put that right there. And so you've got like a fractal setup happening. Does that make sense to you all? Breaking market structure. Now you would have to be pretty careful with this setup because this is a large range. You also have a breaker here. It could return all the way down to the breaker. So typically you'd be trying to get an entry here. I would at least wait for it. We'd put an entry on and see if we get it or not. I would at least wait to the 50% of this fair value gap here, and you would expect some significant drawdown to go back into this breaker potentially, and you know, even down to here sometimes. So keep that in mind. Let's call this LTF, which stands for low time frame. Low time frame liquidity taken at high time frame sell side, which is Friday's low, remember? Let's pull this over. Make that clean. And we'll fix this so we don't get confused. Great. Okay, and if you want to, so easy on the eyes, you could just make it like a different color if you wanted. Okay, and why am I going for this as a break-in market structure? I mean, we could technically call it this as a break-in market structure. Yeah, that's great. But the initial move that went down to the high time frame sell side liquidity and grabbed it, the last swing high that it left in place before it did that, that's really where you want to be focused. You want to wait for that to happen, right? And the potential here, we got a couple options. It goes into this order block, fills in this gap, and shoots to the moon from here, potentially up to here at least. This little gap that it left open at equity open. Or the other option is that it comes down into here, at least the consequent encroachment, or the halfway point, or potentially down to this breaker, and then it goes up from there. So here's what we're going to do. Let's fix this real quick. Let's go ahead and take a before screenshot, as this would be our before setup. And we've got one clear singular fair value gap here. So our long position would be, let's measure this out. At least a consequent encroachment, or a little bit right above it, just in case it doesn't get there. So that's spot on, that's good. The candle that forms this fair value gap discount line, this one right here, we put our stop loss right below that. And again, you know, we'd be okay with getting stopped out because it could come into this breaker here, this highest body candle in this V-shaped swing. Stop loss well below the breaker. Let's put that inside the breaker so it looks cleaner. There we go. And your first target is obviously going to be this right here at equity open, or the high of equity open into these gaps. But if you look how clean this price action is here, it's too clean, it's too flat. So I would at least come up to right about there. Right, and that gives us a 3-to-1 trade if we catch an entry. So let's see if we can catch an entry. There's our entry right there. With spread, I mean, you may not have caught it, but you can always get a close proximity entry. Let's just say we caught this because we were expecting it, right? To get almost to CE or at least to CE. So we'll just call it right there. That's a pretty damn good entry. I tend to think it might come back down and sweep below that again. But let's see if that's the case or not. We'll speed this up. Let's call this a during screenshot. Take our screenshot. Bam. There you go. Ultimate target, of course, is going to be the opening price of the day. All right. Unless this was just the high of the day here, just barely poke above, shit the bed, form the low, come back up into the middle of the range, chop around, we'd still be profitable if it hit our target. So always have in mind the higher time frame and what that could be doing. Let's speed this up and see if we get knocked out. Okay. We're in the lunch hour, which gets kind of crazy. It's quite possible we'll get stopped out here on the return to the breaker. Stop loss at 829. There's your stop out right there. Potentially. Depends on your broker. Although I do want to note here, looks like an OTE maybe. Right? And we're already into the afternoon, so you know you could let this play out, but you've been in the trade for quite a while. You may want to scratch this instead of taking a huge loss. There's our stop out right there. You done, you lost it. We were at least, let's see here, 864. 922. You were about 70 points in profit. You could have taken some profits and gone to break even, but more than likely most people would be trying to hold for the end. So let's call that a loss for the day. And we lost, let's see, singular fair value gap, post equity entry, more than 60 points displacement. Let's call it 2.5%. Let me move this up so you guys can see this, and we'll be diligent about marking this out. December 26th, post-equity entry. If you believe in the trade, you could get in again. I wouldn't recommend it though. External liquidity grab, yes. 60-point displacement, yes. No to the stop loss being 25 points or less. Drawdown was more than 25 points. Price action was average again. It wasn't clean. It wasn't choppy though. Trade duration was over an hour. And it's a one clear fair value gap. and a breaker proximity, 5-minute breaker. Let's call it B plus setup. Let's say we risk 2.5%. Let's find out our stop loss was 34, so 34 times divided by 2,500, or vice versa. We would have had a 73 lot position size on 73 times 34. So we would have lost $2,400. Minus 34 points. And then minus $2,400 basically. So we took a loss on that. Let me pull this down so you can see price action, and we'll play it out and see what happened. Can you guys see that? Yeah, you should be able to. Okay, so let's take all this garbage off. Take the breaker off. Take this off. So it's repeating the Friday's low. Back down into Friday's low. But for all intents and purposes, I mean, this little run down into our area that we wanted, if you had taken partials, you would have done all right for the day. I mean, that's 60 points out of 100 that we were targeting. It's 2/3 of the way to your profit target. You probably want to reduce the stop right up to that breaker. So maybe you made some money for the day, but we're just going to pretend like we held on to it and take our losses like usual. So let's play this out and see what happens for the rest of the day. Repeated the low of the day. Last hour of the day, probably see some volatility injected. Yeah. So it left the low intact from earlier in the morning. Now we're into the next day. So you took your loss that day, no big deal. It is what it is. It happens with every strategy. I'm glad to finally see a loss on the back test here because it was kind of unrealistic so far. You know, you do get winning streaks, but it's not always. So we'll move this bad boy over. Now we're into Tuesday. And we can get out of this 1 minute chart, zoom up to the 15 and get some perspective here on what happened. So we've just taken yesterday's low. And we could be going for last Thursday's low now. Let's see if that's the case. Also, we want to check and see there's no high impact news for Wednesday. And it seems like we could have just been repeating the low here. So we're still looking for upside into our POI, which is this guy over here, which will shift over. Right? Mark out our midnight open. Now, this could be the day that we see, finally see a run up, because we just taken a daily low. Yesterday's low here. There we go. I like seeing this. This is the ideal London session price action that I want to be seeing when I'm getting ready to take a trade in the morning. I want a clear high and a clear low ready to be taken, not far apart from each other. And also a previous daily high or low being taken as well. That's just a icing on the cake there. Looking good for a reversal upwards from here. Okay. And we stay, oops. Shit. How the fuck did that happen? Sorry, guys. Well, clearly we were wrong. I mean, we should know that, but clearly we were wrong here. I guess we'll just play this out. Why did that happen? Did I click the... Oh, I clicked the wrong button. Sorry about that, y'all. So that was a purge of a daily low. So it took it yesterday, and now it's purging it, obviously. Let's see if we can play this out a little bit until we get a break upwards. Nope. So Wednesday. So you've got an internal liquidity grab at midnight open. A pre-equity entry short. But there's no way to know that, so we wouldn't have taken any of these trades. So what we would do is we'd wait. Holy shit. Look at that. That's 1076. 9, that's like 200 something points right there. So now we can probably stay away from the day. But if you want to play it out for backtesting, we can do that. Buy side taken. People would be longing all in here. I wouldn't long yet. And look, this is technically a shift, a market structure shift, but do you see how the buy side was taken here? We took sell side first. This is probably a day where we would get jacked up really hard and take another loss. It's not clear. Almost end of the year. So we'd just be waiting. Now do you notice how we've taken sell side first, then buy side, sometimes what will happen, and I think ICT mentions this in his 2020 fair value gap series, sometimes what will happen is it'll take the opposite side, take the real liquidity, and then you'll get your model. Right, so if we were to say that's the case, and also what clues us into that we could potentially use this swing low after the liquidity grab instead of before is these nearly equal lows. But I tell you what, if we go down to the 30-second, there we go. Even on the 15-second, there we can finally see. Sometimes you have to get down there into the lower time frames. But you can see a swing low finally. So let's call this buy side taken. It's a pretty confusing price action. And the bias that we're looking for is to at least see a retracement up into our POI, up above this area. But you're probably going to see it come down and retest the daily low again that it took, or at least come back down into a discount of this range. So for low time frame entries, that means we could take a setup here. Just like that. Okay, let's take a screenshot. Bam. Let's play this out. Shift in market structure incoming below these equal lows. Yep, there it is. Below this swing low before the liquidity run. Technically, you could even use this one down here. Fair value gap at the center. And this is not cherry picking, y'all. If you look on my live stream for the FTMO challenge, I was actually down on the 15-second, 30-second charts looking for stuff when I couldn't find it on the 1 minute. So it is valid. And ICT says most of the algorithms do their work under the 3-minute charts, but even down to the 30, 15 seconds. You see this volume imbalance was taken on the candle that formed this fair value gap. You've got a mitigation block right in here. Just make it orange. Okay. And then let's measure out this range. All right, so you'd be targeting midnight open. You'd be targeting this opposing fair value gap here, at the very least, into this breaker. You want to at least see it come back to this breaker and potentially beyond. Okay. And for the purposes of the lower time frames, just so this isn't so confusing for y'all, you can see there's also some buy side taken here. Might as well have just grabbed a new line, I guess. Do you guys see that? Barely, just barely. Poked above it. This price action swing poked above. That would make this breaker, bearish breaker. Okay, well, why are you picking out all these things? Well, I'm looking for confluence and overlapping of price action arrays. Right here, we've got 3 price action arrays. We've got the fair value gap, mitigation block, and a breaker within this whole price action swing here. Buy side's been taken, sell side clearly right here, and the important one's been taken as well. So that's why we're doing this. Okay, so this would be our before screenshot. Bam, there we go. Then we'd set up our entry. Why wouldn't we enter at the bottom of the fair value gap discount? Well, because there's overlapping arrays here. So at the very least, it's going to come up to this, which is also the EQ of this fair value gap. So there's another point of confluence, 25-point stop loss above the BSL that was taken. And we're targeting at least down into this to touch this breaker. And I would say at least even, somewhere around here, at least the EQ potentially. It gives us a 2-to-1 trade right into the EQ of this breaker. Let's move this over. Okay, now we can play it out. There's your entry. And we got stopped out. How about that? Okay, so we mark that as a loss. And then it finally goes to our target for the day. And that's one that really sucks. I mean, that just sucks really bad, where you barely get stopped out. I mean, I suppose if you had put it above this high, but realistically, we would have put it above this here. All right, so we got to stick to it. The trade played out. If you somehow miraculously didn't get stopped out for some reason, the trade did play out. And it happened at 9:30. We got in at 8:57. So you're in the trade if you made it through for about 30 minutes. We're on a lower time frame. Price action isn't that clear. We're kind of taking a smaller. No, yeah, well, technically we're taking like a smaller take profit than usual. So this would be like a B trade. Let's say you risked 1.5%. Which is $1,500. You're down 25 points. You guys, again, I want you to realize that we're at the end of the year. We're trying to backtest the end of the year in the month of December, which is one of the shittiest, most choppiest months ever. Can you make money? Yeah. But you want to avoid the beginning of January, the whole of December, and August. If you can get those three out of your trading, you'll be doing really good. But we're backtesting December, so that's what we're going to do. Minus 1,500. I'm sorry, you guys can't see what I'm doing. I apologize. There we go. Great. Let's call that a B trade. Huh, something's going on here. For some reason, my cursor's not working and I can't get this to... You guys see me struggling here? Let's call this save. We'll close this out and then reopen it and see if that works. Can y'all see this again? You can. Okay, great. There we go. I don't know what that was about. All right, so it's a B trade. This is the 27th. Or the 28th, actually. That was the 27th, this is the 28th. We had a post-equity entry, external liquidity grab, less than 60 points, stop loss 25 points or less, yeah, we had that. Drawdown over 20 points because we got stopped out. Price action, average. Duration was about 30 minutes. Multiple fair value gaps. Proximity raise, yeah, there definitely was a lot of those, and they were under 5 minutes. Okay. So we've been on the stream for a while. I can pick up another one tomorrow if you like. Let's just go ahead and do some calculations, right? So what we have is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we got about 10 days of backtesting under our belt. And the results of this are pretty hefty. This is good. So let me add all this stuff up real quick, okay, y'all? 12,000 plus 9,200 plus 2,250 plus 5,400, 660. 3948. So $41,600 in total wins, and then you lost about $4,000. Let's call it 3,900. So minus 3,900. So just on a $100,000 account, over the course of a couple weeks, only trading 10 really good days avoiding NFP, avoiding holiday type stuff, trading consistently. You had 7 wins and 2 losses, and your 7 wins netted you, after the loss, netted you $37,000, right? Using the grading setup, being very consistent, that's not bad at all. I mean, you made somebody's yearly salary within a couple weeks. It is doable, it is possible, right? There's people getting paid out this type of stuff every month. Some people every week, or every other week. Some of the bi-weekly payout funding programs. So this is totally doable. Is it going to happen for everybody? No. Can you take it a little bit slower? Yeah, you probably should, right? It's $37,000 net profit in a couple weeks. It's just fucking crazy to me. I can't wait to start doing that. I found out about funding programs recently, and if you go on my channel, you can look and see me make my way through the first phase of the FTMO challenge. That was kind of difficult for me because I was restricted to only taking trades during the stream, and I saw a bunch of clean setups. Some days I had really shitty setups and basically because we were in the end of the year, I was focused only on hyper scalping. So you'll see me go long, go short, go long, go short, take a small little scratch out loss, get back in the other direction, make a little bit of money. I made a bunch of mistakes, and I still passed that fucker in like 11 trading days, and I had 8 positive days where I made at least $1,000 or more, and I lost on only 2 or 3 of the days of overall trading. So it is possible. You can definitely do it. I would encourage you, if you are live trading, to not use a small account and actually go try to get funded. But you have to have the framework and the foundation first. You need to know the strategy inside and out, or whatever strategy you're using, right? And then you have to know yourself in and out. And the little missing piece or equation that nobody talks about is a daily routine. I cannot stress to you how much a daily routine has improved my trading. What do you mean by that? Well, what I mean is, before you even walk up to the chart, you need to be doing the same fucking thing every single day, no matter what. If you're going to trade, you need to be getting physical exercise, maybe visualization, something. For example, my routine, when I wake up, as soon as my eyes open, I put my phone down. I don't scroll. I don't go through social media, get all my serotonin and dopamine hits. I put my phone down. The first thing I do is get sunlight in my eyes, right? So I go outside, I take a short walk. Even if it's it's cold as fuck here in Texas, right? That's where I live, in Texas. I'm sure some of you have it worse than other parts, but when it was like 30 to 25 degrees, I was outside, and even if I took like 15 steps down the sidewalk and then I'm like, fuck this is too cold, I at least got out there. I did the walk, right? I got my exercise in. I come back in, maybe do some push-ups to make up for not getting the whole walk in. But I did what I needed to do. And what that does is it puts your mind in the exact same, or as close as possible to the exact same framework as possible every single day. So you're coming to the chart with the same psychological or mental or emotional disposition, or as close to it as possible. Whereas if you're scrolling news and you see people making money or losing money, or some news event happens, you're all distracted, your psychology is going to be different than it was the day before, or potentially the day after that, right? And that's just one of the biggest things that I think a lot of people miss. They're like, okay, well, trading psychology is important, but what do I do? Well, you do the same fucking thing every single time before you get to the charts. Okay, great. Now what do you do when you get to the charts? You do the same fucking thing that you do every single day when you get to the charts. In this case, what you've seen me do is, pretty simple step-by-step stuff, right? I mark out midnight open. I mark out equity open on a vertical time basis. I mark out the midnight open price. I might go check the higher time frames to catch some semblance of a daily bias for the day if I have one, right? I wait for post-equity entry open, or post-equity open entries, if you will. I mark out proximity arrays. I'm logging my trades. I'm taking screenshots. So it's the same. You just do the same thing, and if you can, that's where you're breeding consistency. People are like, well, I want to be consistently profitable. How the fuck are you going to be profitable on a consistent basis if you're not doing consistent things? It just is as simple as that. It really is as simple as that, right? And you see it. You saw us take 2 losses in a row. Whoop-de-doo, big fucking deal. We had however many wins before that, in a row. And of course, this is backtesting, right? And your results will be a little bit less than ideal when you're in live trading conditions. But if you have the psychology consistent, if you have the trade setups, preparation consistent, if you're executing like a robot without fear, and if you're accepting your losses in advance and you walk away from a loss, if you can do those 4 or 5 things, I promise you, you will see a significant improvement in your trading. And who the hell knows, you might actually get consistently profitable if you're not already. If you are already, then you'll see a big improvement in your win rate, right? So you must build the foundation. You have to build the foundation first, okay? It's just sort of just like heart to heart, if you will, stuff that I've struggled with, and I know a lot of people have struggled with. I was not consistently profitable for years. And even now, I'm just getting started on the funding challenges. So who knows what we're going to see? I'm going to start live streaming my verification phase, or the second part of the FTMO challenge in late January or mid-January. And we'll see how that goes. I expect to pass. So, yeah, I appreciate y'all hanging out with me. This was an extra long stream. Thanks for sticking around. I appreciate it. Don't get disheartened when you're backtesting or in live trades if you take a loss. That's part of it. You cannot fucking avoid a loss. You cannot do it. It will happen. Accept it. Fucking accept it, please. That will just get you over so much shit. I promise you it will. So I really hope that I could help you in any way possible to accelerate your learning curve. Keep up the study. Don't give up trading. Never, ever give up. And, my rant is over with. That's basically all I had to say to you. And I tell you what we're going to do is sometime next week. I can't promise what day. I've got some other stuff going on with my business and other things. But sometime next week, we'll start doing forward testing, which is essentially just demo trading, right? You're using your strategy in a live environment, in live market conditions, but with demo funds, right? We'll just start taking some demo trades on TradingView until the midweek of January, and then I'll pull up my FTMO second phase, and we'll get going from there, okay? So thanks for being with me. I appreciate y'all watching. Subscribe if you haven't already. Maybe give the video a like. If I talk too much, if I've done something that you have questions about, leave me a comment. Don't be afraid to do that. And I wish you the best. Good luck and good trading.